Teddy Keckstead from Forex Trading Unlocked, and we are here on April the 28th, 2020 with a live Forex market analysis and daily trading breakdown for you. And before we get into everything, we just want to pull up our disclaimer to remind you that this webinar is for illustrative and educational purposes only. That is it. And to let you know also, our webinar is being sponsored by the book High Probable Japanese Candlestick Patterns, available on Amazon.com in Kindle and paperback versions. With that, let's get to the live screen and see if we have any of these patterns showing up. So we have the Forex-Trading-Unlocked.com website pulled up. We have the workstation page already going. Set up here. Let's blow this up, make this a little bit bigger of a there we go. Okay, there we go. All right, this probably looks a little clearer for you out there in webinar land. Okay, so the dollar index over the past couple sessions has started to retreat a little bit. The dollar's under pressure, but really, if you look at it, it's starting to consolidate. It's wedging now. So we're keying off of this downward sloping resistance where we go from the last high back in March through, back to our high from a couple sessions ago. We had this buy signal a few weeks ago that we rallied into. We fell just into our bottom range of our target zone. We did not take out this previous lower move high here, so that means we made another lower move high after this higher move low, which has us in a neutral position. We have this upward sloping support line here, so we're looking for basically the dollar to settle down into a choppy trade as it wedges and gets tighter down into this little support area as we head into the end of the month and start to look as we move into May. So really what I think we have done is, if you look at the parameters of the last swing high and last swing low, this might really pretty much be the range that we're going to be contained in. As you can see, since the end of March, actually this is where we have been trading in. So we're in the upper part of that range, settling into the middle part. Let's see what's going on with the currencies now. So for the Euro US dollar, let's see what we have going on here. So the dollar is under pressure, has been for the past couple of days. We have the Euro US dollar, which is pretty flat on the day right now. So 2 days ago, we planted a nice little short-term low. We did make a lower move low on the daily basis. So after a lower move high, keeping the downward trend in place. Right now we are in a corrective move right now to the upside. Today, as you can see, we had been higher on the day. We're in the lower half of the range from today. So, but we'll see what happens if we're in a buy dip such scenario, or if we are truly in a beginning of another corrective wave lower. So right now we don't have any signals going on, so we have to wait and bide our time a little bit. I think, like I said, with the dollar index, remember the Euro US dollar is one of the biggest components in the dollar index. So as long as this is kind of being neutral, and you can see how the ranges are tightening up. I mean, let's see, yesterday's range, we had a low of 108.11 and a high of 108.60. That's a 49 pip range, which for the euro is actually a pretty quiet day anyhow, but definitely over the past month and a half, that's nothing. So you can tell that volatility is decreasing. Europe is coming back online, especially Germany. So we'll see how things manifest. Right now, we do not have a trade set up in here, but we are slightly bullish to Euro US dollar right now. So let's look at the US dollar Swissy and see what's going on over there in Europe. So for the Swiss franc, this is another market that as you can see, look at this. This looks just like the dollar index. It basically has just, I mean, now this one did make a higher move high a couple of sessions back, but as you can see, just on the past couple of sessions, for the past 4 actually, we're in a very tight range here. This is another reason why we have to be careful with this until we have a signal. We had this buy signal on this last swing low here a couple of weeks ago. We came into our lower end of our target zone. It was reached. And now, does that mean we reverse? No, not necessarily. We could go sideways. Maybe we will go lower. I don't know, but right now we do not have a signal, and right now, like I said, it's a mixed bag of goods with the dollar. And if this is truly the scenario, I think you're going to see range traders capitalize well, and bulls and bears, you just have to wait for a signal to figure out when you make your next move. At least I would say that would be the smart thing to do. So British pound, US dollar, let's see what's going on here. Now the pound has had a little bit of strength versus the dollar for the past few sessions. We came down here, we had this little sell signal, we barely touched our target zone, and then if you look at this is kind of interesting. We have a potential head and shoulders forming. So if this rally that we're currently in falls apart, as you can see today, we had made a higher move high. Right now we are currently lower on the session, or right neutral on the session. So I don't know. We'll see. This could be just setting up for sideways, just like the dollar. If the index is going sideways, this is one of the major components. So if the other two components, the Swiss and the euro, are going into a range trade, it stands to reason that the pound may as well. However, we do have this critical little support line right here, where if we take out this last swing low, we also take out the neckline for the head and shoulders, which puts this market in a temporary bearish mode, especially because we'll be making lower move lows after a lower swing high, which would be today actually. So we'll see how this manifests. Right now we do not have a trade, so do not, as far as right now, I'm saying look for neutrality in the major currency crosses. Be careful. Range traders are the ones who are probably going to be profiting the most. Look at this. The US dollar yen has finally fallen through support and made newer move lows. But by how much? Not much at all. This market is weighing a little bit heavy. Obviously, the bears are the ones that have been ripe for the action over the past few weeks, but even still, not much action there to the downside. So I think that range traders have been doing well, and probably will continue to do so as this market stays probably pretty tight. I think it's setting the bottom part of its range before it comes back into this trading area, probably above the 106.80 area, back up to challenge this 108 even area, and then we'll see. Maybe this is going to be the new range parameters between 106 and 108. But right now, this is another market. We do not have a signal. This market too, it is wedging, but we just made a lower move low. But as you can see, it's not. There's no zeal. There's no momentum in this. So that tells me that even though this market is bearish, there's not much room for the trade. So especially with the dollar, if it's in flux, and right now if it starts to come back, you know, we just have to let's see what if there's a building of momentum in bearish sentiment for the U.S. dollar overall, then we can maybe start to see some swings again. But right now, I think we're setting the parameters for the dollar. Remember when we started out the webinar with the dollar index? We just came off the upper part of the consolidation range. Now we're settling into the middle part. We'll see how violent or non-violent we make a test of support and establish these boundaries. So let's see what's going on with the Australian dollar, U.S. dollar. Now this is a market where this currency cross has been a bull since the middle of March. It's maintained its bullish posture over the past couple. Broke out to the upside, making a higher swing high, and has continued to pressure resistance even today. So this one isn't, oddly enough, this bear has been the little engine that could. So bears have gotten slaughtered on this one. We had a sell trade a couple weeks ago that manifested only a small plus trade before it got stopped out, a loser. So, and now this one is confirmed strength. We have broken out the long-term downtrend. This is kind of interesting to see how we did yesterday come out. We breached this long-term downtrend. But I would not really put us on the overall bull bandwagon right now. The strength in the Australian dollar, I think, comes from China coming back online. But then even still, I think that's going to come to a little bit of a slow halt as well, because where are the goods going with the rest of the world still in shutdown? Now let's look at the New Zealand dollar, U.S. dollar. So New Zealand dollar, U.S. dollar also has been in a nice little rally mode against the U.S. dollar, but you can see that this one has failed to make higher move highs. So we have a little bit of a divergence in the two currencies that are in that Pacific trade zone. And as you can see, this one also has a head and shoulder. In fact, let's go back to the Australian dollar, U.S. dollar. So remember, this one we said has been pressing its bullish momentum to the upside. It had made higher move highs. So this one right here, we have a very strong support line maintaining this trend, right? Okay, so this last swing low would be our downside pivot for any type of bearish momentum. But then let's go back to New Zealand dollar, US dollar. So either we have true divergence where the Australian dollar, US dollar is a bull, and the New Zealand dollar, US dollar may be actually becoming a bear and resuming its downtrend. See, now this is the interesting thing. Remember we had the Australian dollar that came out of its uptrend, or downtrend, excuse me. This market has not. It's just wedging and consolidating. So, and since this has, off of this rally here, we have a head and shoulders formation forming. If we fail to take out this high right here, this last swing high, this lower move high that keeps the downward trend in play, or keeps this uptrend in place, last higher move high. If we fail to breach this level and we stay below this downward sloping resistance line, then that means we most likely will make a test, have a test of this neckline. And if we fail from here, well, then all bets are off and the bears probably will come back to pounce on this market. How extreme? Well, that's a whole other case to figure it out, but there's a good chance that we could get this market back below the 58-cent level, maybe even bring it down to this 56 area. So we'll see how this manifests over the next couple of weeks. Right now, we have to wait for the signal. So let's look at the U.S. dollar, Turkish lira, continuing to buffer against resistance. Since as long as the coronavirus curve does not flatten in the Middle East and Iran, and especially in Turkey, obviously, because we're looking at the lira, I think that the trend is going to remain an aggressive bull, buy dip scenario for any corrections until we start to see a flattening of the curve. This market has been in a crazy bull market since last summer, and especially since the first of the year and the breakout in March. This is just a powerful rally, and the velocity, even though it's pretty steep, it's not that steep. So right now maybe we're seeing a rounding top happening. I don't know. I'd be very leery because of the spreads on getting in and out of this one. Now the U.S. dollar, Mexican peso, here's another one with a country where the coronavirus curve has been going upwards still. But it looks like this one wants to take a little break from the dollar. So let's see what's going on here. We have another head and shoulders formation forming right now. And we have a swing low, a lower swing high. We're trading lower right now. If we continue to come down and especially take out this neckline, then I think, well, we have a good chance at having this market correct even more. Now, here's the one problem with this, though. If the fundamental coronavirus is still in play and it really is driving this U.S. dollar Mexican peso bull, even if the dollar becomes a bear versus the other major currencies or consolidates, there's still potential for a run-up in this currency. Unless this is overdone. If this is overdone and it's over, I mean, you think about it, this market was in a bear market all the way until the middle of February, and then shabam, this thing just exploded ahead of all the other markets. And you can see how much, I mean, spring break definitely got cheap. Of course, a lot of people came back from spring break with something they didn't really want to come back with, obviously, so because of the coronavirus. But we'll see what's going on with this. We are starting to see, even in the Mexican peso, the dollar start to lose some of its luster and strength. So the U.S. dollar Canada, oops, we put in the wrong symbol there. Let's get this correct. The U.S. dollar Canada, on the other hand, this market is showing that it wants to go lower. Today it is probing new remove lows. Now this market started to consolidate already back in the end of March and has stayed in a containment range for a while now. And that's the big question: is will this market actually fall apart now? We have a gap down here from the beginning of March to fill, but right now, unless we have true dollar weakness that settles into the market, I think that it's unlikely that we will get down to fill that gap anytime soon. That doesn't mean that we're not going to play with support. I just don't see a lot of strength coming into this market, let alone any overall weakness as well. So there's really nothing in there in this one. We have to wait for a signal as well. Let's go back to our Euro US dollar where we started our webinar off and see how that's faring. So we haven't seen much movement. As you can see, the Euro US dollar is right about where it was trading when we started the webinar. Not much to go on right now. We are slightly bullish this currency because we're bearish the dollar, and we'll see how this manifests. It's a pretty quiet day. It was a pretty quiet day yesterday to start this week. As you can see, volatility has begun to wane, and I think a lot of the world is just trying to, it's not that they need a break or they're just calming down. It's just a matter of we've had so much volatility. We were trying to absorb so much news. Now we just need a little bit more time. I think the anxiousness and the angst, if you will, is starting to wane, and now it's more about people just in expectations of trying to get their life back on track and get back to a semblance of what kind of a world we had before all this nonsense started. So anyhow, very interesting stuff. Please subscribe to our YouTube channel, Forex Trading Unlocked. Always check us out at www.forex-trading-unlocked.com, and remember to check out the book High Probable Japanese Candlestick Patterns, which is available on Amazon.com in Kindle and paperback versions. And through it, you can utilize the best buy and sell patterns used for over 400 years to give yourself a competitive edge against the markets. With that being said, I want to thank you very much once again. I'm Teddy Keckstedt from Forex Trading Unlocked, your key to online trading. Have a good day.